Hello folks, welcome back to another topical teaching, and today we are going to be discussing the 930 fair value gap and how we can use it to our advantage upon 930 New York Open. So as we go through this presentation, we're going to be looking at different examples and different ways of how the algorithm is going to refer to the first fair value gap that is created after 930 New York Open. Of course, this is in Eastern Standard Time. Okay. So for example 1, we're going to look at the 930 fair value gap, but we're going to look at how we could have played it with a inversion fair value gap. Now, using the 930 fair value gap as an inversion is one of my favorite setups at New York Open, and I'll explain why. So as you can see here, we have 930 open on this candle I have labeled as I drag it out right there, and then we displace lower, and what do? We run these relative equal lows. But what did we leave behind? We left some clean highs here and of course buy side liquidity at this swing high that I have labeled. Now, the reason I love the 930 inversion fair value gap is because right here, we're running right after 930 open, those sell stops as we already mentioned, and trapping shorts. So any fair value gap that is formed on the way down here, I'm looking at as a false fair value gap and I want to see that get inversed. So what does that mean? I want to see a body close back above it. Because what do we know? The bodies tell the story. If we are bearish, we should not close back above this fair value gap here. And of course, we definitely shouldn't close above this fair value gap here that's in a deeper premium. So the fact that we're running those sell stops, trapping shorts, and then immediately closing back above the first fair value gap formed after 930 open tells me that we could be seeing a potential reversal at least back to these highs right before 930 open. And of course, we want to see it reach for this buy side liquidity if we're looking for a long off this inversion fair value gap here. So where would our entry be? After we close above, it's very slightly here, but we do close above this 930 fair value gap. Your limit buy order is right at the high there, and you want to put your stop loss below the inversion fair value gap. Now you have to put it a couple ticks below the low of the inversion, just in case we do want to wick below it, but you do not want to see bodies close back below here. If that did occur, and I often do this, and price has not hit my hard stop loss, I'll just manually close a trade, assuming I am incorrect about this specific setup, and try to save myself a couple points. But in this case here, we can see how we can use the 930 fair value gap once it gets inversed to spot essentially a 930 Judas swing right upon that opening. Now here we're going to look at another example of how we can use the 930 fair value gap once it gets inversed. Now I know you're probably seeing this setup and saying, wait, isn't this the same setup as the one we just looked at? Yes, it's very similar, and that's the point. These things occur over and over and over again. So similarly to the previous setup, we have relative equal lows, and then we have buy side liquidity. We have 930 opening price right at this up close candle I have, but see how we fell just short of this swing high where I have the blue line labeled buy side liquidity. That's just engineered buy side. We leave that high, then we displace down to go purge these relative equal lows, and we trap shorts. Anyone who's trying to play a breakout trade, looking for a deeper move to lower prices, are getting trapped below these relative equal lows. So of course, there's different ways to trade it, but for this specific strategy, when we're talking about the 930 fair value gap, all we have to do is wait for a body to close back above that first fair value gap formed after 930 open, and then we do the same thing that we did in the last setup. Our buy limit order is here at the high, and we put our stop loss a couple ticks below the low, okay? And of course, this isn't an enormous move, but this is a great scalping model for 930 open. And just a great way to spot that New York Open Judas swing. Okay, for our next example, we're going to be looking at the reclaimed 930 fair value gap. So there's a couple things I want to discuss about this particular setup. First off, we have to just note 930 open, this light gray line I have dragged across here. And then, of course, the 930 fair value gap, this orange box I have dragged across. That is where our interest is at this moment. And before I continue discussing the things I want to speak about in this setup, of course, there are ways to get involved down here, whether we're looking at a KRP down here, okay, any other strategies down here, turtle soup, whatever. But for this specific teaching, I want to discuss how the algorithm utilizes the 930 fair value gap. So that's all we're going to focus on up here. So if you see my note up here, the 930 fair value gap is reclaimed after the manipulation phase has occurred. So again, we have 930 open, we create the swing low, then we have our 930 open Judah swing, or our manipulation phase. That does what? Runs out the sell stops and traps shorts. Now, before we ran down, you can see that there was no return into the 930 fair value gap. If we were looking to play this 930 fair value gap as a 930 inversion to catch this move down, we wouldn't have been able to get involved. So if we're assuming that we missed this move and we've already ran these sell stops, I would be hesitant to re-enter a short once we got back up to this 930 fair value gap, which before we closed back above it, of course, was an inversion. But since we know that the manipulation phase already occurred, we're looking for this BISI to get reclaimed, and then we want to see it used as support with any returns into it, okay? On top of everything we've already discussed about this particular setup, look at how clean these highs are. So they're running sell stops and leaving all of this buy side. And if you look at the top right-hand corner here, we have London high, which would be our terminus. And of course, you can see we got this later on in the session. Now, in terms of an entry, this candle right here, we do slightly close above it and then drop down into it, and you can get filled there. That's perfectly fine if you want to actually utilize the 930 reclaim fair value gap and use it as your entry. That's perfectly fine. But in setups like this, where we are reclaiming the 930 fair value gap, I more so use the 930 fair value gap as a barometer to say, okay, if we are going to continue to buy side, and these are trap shorts by extension, this low is not going to be taken out. I want to see us expand through, reclaim the 930 fair value gap, and then look for entries. And that brings us to what? Our bullish breaker, this blue line I have dragged across here. So we have a low, a high, a lower low. So these 1, 2, 3, 4 consecutive up close candles can be your entry, and we should expect that to support price. Why? Because it's nested in and above the upper portion of it, the 930 fair value gap. So if this is our entry, of course we want to see it expand through these highs, and we want to see it reach for that London high, which you've already discussed. We got this later. But importantly, what time are we reclaiming this 930 fair value gap and getting our entry from this breaker during the 950 macro? So we can start to combine some of these concepts to really understand, okay, the algorithm is doing this, right? It reclaimed the 930 fair value gap. That's an important inefficiency for the session, especially the opening range. So we reclaim that, come up, almost take this high, but we leave and just engineer more buy-side liquidity. And then we work this breaker, and then we actually expand, consolidate, and then eventually get that London high. So the reclaim 930 fair value gap, the main thing is that we want to see it get reclaimed after the manipulation phase or New York Open Judah swing has occurred. Now, this specific example and specific setup will probably take some getting used to. In comparison to the 930 inversion fair value gap, it's pretty easy to spot. Okay, so just dig into your charts, look for examples where the 930 fair value gap is getting reclaimed after the manipulation phase when they leave clear relative equal highs or relative equal lows if we just flip this setup. And I should mention now, I should have mentioned it at the start of the video, all of these examples are on the 1 minute time frame. Okay, and example 4, we're going to be talking about the first displacement after the manipulation phase has occurred. So these particular setups occur when we have a choppy open. Okay, so you can see 930 open is right here where I have this gray line attached to, right on this down close candle. And we have clear equal lows down here. So that's your sell side liquidity, which we'll get to, will be our short target. But right at 930 open, do we go down and purge those? No. We come down, make a swing low, right? More sell side liquidity, and we don't take those lows yet. So those lows are still in play. But there hasn't been any clear manipulation yet at this point when we're coming down here. And 2, there isn't any clear displacement, which we would classify as our 930 fair value gap. Okay. If you're looking really closely right here, there is probably maybe a point of a fair value gap here. okay, and right here, but we're looking for that first clear displacement, okay? So finally, after leaving all these lows, we come up, purge the high, and trap longs, okay? So anyone who is looking in this choppy action upon 9:30 open are saying, okay, finally we're getting above this high, we're breaking out, when they're just getting trapped. So all we're waiting for is to see if we get displacement after this manipulation phase. Do we get that here? Yes. We get this SIBI formed, and we would get filled on this short when we retrace back into our 9:30 fair value gap. So it's still the first clear fair value gap after 9:30 open. That's why I'm classifying it as the 9:30 fair value gap, and it's just bonus that it's after we have the manipulation phase. Okay, and then like we mentioned, of course, we would be targeting these equal lows. Now, one other note on why the 9:30 fair value gap is important and the first fair value gap after the manipulation phase is because in this case specifically, there's no market structure shift where, okay, we have to wait for a swing low to be broken in order to get involved in target lows or get involved in a short, right? In this case, if we were to wait for a market structure shift and say, okay, we can't enter any shorts until a swing low is broken, our target would already be met by the time we waited for that market structure shift. And then we would be asking ourselves, okay, well, we've already purged those equal lows. Do I really want to enter a short now? Right? So understanding the significance of the 9:30 fair value gap is a great way to get involved without the necessity for a market structure shift. Okay, and for our last example, we're going to be talking about how we can classify some PD arrays as high probability using the 9:30 fair value gap. So, of course, like I mentioned in one of the previous examples, there's ways to get involved down here, like some of the strategies we've already discussed on this channel. Okay, so we won't talk about this. But again, this specific teaching is on the 9:30 fair value gap, so I want to focus on what is occurring in this chunk of price action. So just to set the stage for this particular example, we have buy-side liquidity here. We have 9:30 open here. And then we have our 9:30 fair value gap, which is this orange box dragged across. And in this example, as you can see, we will be using the 9:30 fair value gap as an inversion fair value gap. So 9:30 open, we displace lower, we run these lows. So the manipulation phase has occurred. We've had sell side delivery, buy side delivery, and we inverse the 9:30 fair value gap. So it's reasonable to expect any inefficiency from this move up to remain as a breakaway gap. That's what we'd want to see in terms of looking for strength. Okay, and we discussed that concept and how to identify breakaway gap on my breakaway gap video on this channel. If you haven't watched that yet, go check it out. Okay, but what I want to focus on here is, of course, the 9:30 inversion, but the BISI that's nested inside of it, and then the order block. So again, we expand higher, and what time are we closing above the 9:30 fair value gap? During the 9:50 macro. Okay, so time and price. We're getting these signatures at the time of the day where we expect price to move or just offer the setup for smart money to get involved. So we're closing above the 9:30 fair value gap. Then we have this BISI, we get support, and then we expand away. You can enter here, okay, but let's just say you wanted to wait to see the reaction out of here, and then you want to look for an entry, and you're okay with sacrificing a couple points. That's totally fine, but let's talk about how you can get involved. Again, HP, order block. HP just stands for high probability. Dragged out, it's that blue line. These 3 consecutive down close candles. So why is it reasonable to expect these down close candles to support price? Because it's delivering from an inefficiency. On top of that, it's delivering from a significant inefficiency in the form of a 9:30 fair value gap. So we can enter long off this order block, and the icing on the cake, it's right inside of this fair value gap as well. Okay, so utilizing the 9:30 fair value gap, we can start to understand any PD arrays that are nested within the 9:30 fair value gap, as long as the target isn't met, can be high probability PD arrays. Okay, everyone, that is going to do it for the 9:30 fair value gap video. As you can see here, we have our private Discord community, Real Traders Only, where we do daily signals, advanced teachings, pre-market analysis, daily reviews, trade reviews, personalized learning, live tape reading, and much more. We just brought on another longtime friend and amazing, phenomenal trader, Real Trader Paul. He trades Forex, he trades NASDAQ, and he will also be providing his daily signals as well. And he'll do his respective trade reviews, going over his strategy, how it's different than mine, how it relates to mine, and all that. Okay, so if you guys want to join this community, see the link in the description of this video. And I hope you guys enjoyed this video. Tune in next week, same time, Friday at 3 p.m. for another lesson. See you guys.